My name's David Levine. I'm the CEO of Indico Union, and this is the security token technology panel, essentially how to issue a security token on a platform. So this is part of a security token track. We just heard about how this tsunami is going to sweep us all away. So this panel should be about how actually to participate. My company issued the first token presale under Reg CF November 10th last year. And so one thing I'm going to be listening for is, are these potential partners for us in terms of getting our token into the market? There's a 1-year lockup under Reg CF, so I would love for one of these panelists to solve our problems in terms of getting our token out there. So that's sort of the rubric or lens in which I'm going to be viewing this conversation. I do hope it's a conversation. I hope everybody jumps in a little bit. I'd like to start with each of the panelists introducing themselves and their venture.
So I'm Dan Dhoni. Test. So I'm Dan Dhoni, the CEO of Securin, and we offer decentralized investment banking services. What we do, we use our platform uses a network of broker-dealers to help folks like David who want to do a token issuance get basically a straightforward workflow that walks them through each of the steps of the primary market offering, secondary market trading, and the token reporting components that were mentioned on the previous panel. What makes this possible, makes it easy for folks to do, is our compliance-aware token. We've just announced this recently and issued the compliance-aware token. It builds in regulatory framework from around the world. So we take complex securities laws, map them into the tokens themselves to create a self-governing, self-reporting token. What's particularly interesting about this token is it works across the various ledger technologies. So if you like your Ethereum, you can keep your Ethereum, but you can also use Stellar, EOS, GoChain, and there's a number of other ledger technologies that are coming that are very exciting. So this allows you to be forward compatible as your tokens can move into these new technologies and take advantage of all the benefits there. We also, the second main differentiator for our platform is our Infin exchange. This allows you to tap into all of the various ATS and MTF and other traditional exchange areas to get maximum liquidity, get maximum depth, which is of benefit to the investors in your platform. So the bottom line is this creates a simple model. The issuers can focus on their business model, their main value proposition, and it walks them through all of the process that's required so they don't have to be securities law experts or even blockchain experts to take full advantage of this emerging market.
Great, thank you.
Hi, my name is Carlos Domingo. I started in the security token space like around 1.5 years ago. I founded a venture capital firm called Spice VC, which was one of the first venture capital firms tokenizing themselves. At that time, the only company had done it before was Blockchain Capital, which Greg from Science just mentioned on the previous panel. We look at basically what Blockchain Capital has done. As Greg mentioned, they were using a 2-year ago technology platform to issue the security token, so we thought that they were going to have a lot of problems and there were a lot of things we could improve, so we ended up basically hiring an engineering team for our fund to build our own tokenization platform and tokenize ourselves. There was no one we felt had technology ready at that time. And then what happened is once we announced the project towards the end of last year, a lot of people had grown the interest on the security token space, so we decided to basically spun out our own technology into a company. We launched in January. We have 18 customers already. You ask what is the differentiation? The differentiation is we actually have customers and tokens issued on the blockchain as opposed to most projects that you hear of. We also have moved the early security token that were issued like Blockchain Capital and now Science, which was unexpectedly announced because it was not supposed to announce today. But
well, congratulations.
So, you never know. So yes, so we've moved a lot of the early tokens into our protocol. It's called Digital Securities Protocol. It does actually exist in the Ethereum blockchain. We don't like to announce things we don't have, so today we support that platform. We are already integrated with other exchanges like Open Finance, which is launching very soon with all the tokens issued by Securities, and we have partnerships with many other exchanges that have been already announced there. So I think from that perspective, we're a technology company. We like to actually talk about things that have been done and that are real in the world, because in this space you have to be very, very careful about claims and announcements and PRs and things like that.
Great.
Thank you. Hi, I'm Jackie Mork, and I am the CEO of Totem, and we kind of fill in the gap. We have 2 issuance platforms sitting with us here, and we build blockchain technology and help do strategy for security token offerings. So we essentially fill in the gaps, working very closely, partnering with the companies that would then go through and be participating on the issuance platform and then to the exchange. So we typically, I think we can offer, in terms of the perspective that I can bring in this conversation, would be really looking at things from your business perspective. As you're bringing a business into this and you're looking at doing a security token offering, and from a technical perspective, what does that mean for your business in terms of actually having a security token, and what does it mean in terms of the technology that you're building? Because the assumption would be that the reason you're doing a security token is because you're either digitizing some sort of asset that you want to do, or there's a true blockchain application that your business is trying to apply. So really understanding the differentiation between the blockchain application that you're looking to implement in your business and how that is kind of separate from the security token itself. And I think that this is a really strong point to the conversation, because I think that there's a lot of confusion as we're starting to move kind of from the flood of ICOs that we've seen on the utility token side, moving into the security token side. And so that's an area that I'm hoping to help provide some clarity.
Great. So I'd like to preface this question with the idea of what is a security token and why is it different from a utility token or from a cryptocurrency. There are essentially 3 different types of digital assets. Now, security tokens, which this is about, by definition, are securities, which means that that people invest an amount of money with the expectation of gain in a common enterprise where the work is done by that third party. So essentially, people are trying to raise money for their project, and they are then going to distribute gains to the people who buy this. Are you seeing, and I'd actually like to start with Jennifer and then work it down, Jackie, and then work it down. Are you seeing people taking traditional securities like equity and debt and digitizing them? Are they saying, well, this is a new asset class, let's create something like an investment contract that's a smart contract and has different, great, Mason's here. I'm going to finish with this question, then Mason can introduce himself just so everyone's listening. So Jackie, could you talk about what you're seeing in the market, and then we'll work it down?
Yeah, for sure. So I think that there's a couple different situations that we're seeing coming in. For sure, people are starting to look at how to digitize certain assets. Whether just in the previous panel they were talking about real estate. I think there's a lot of potential there. There's potential in kind of digitizing actual assets in terms of like gold, and I think we're going to start seeing a lot of that coming into the market here. But typically what we are seeing right now is that people are looking for a vessel to raise money, right? And just to be like totally open about that. So if you're looking to raise money in this space, then you really need to understand the implications that you're getting into. And we can talk a little bit more in terms of what that means and the regulations, because it costs a lot of money to set your company up, and you have to really understand your business model and everything going into it to really do a solid token offering, especially if you're going to be registering it as a security. And so I think a lot of companies that were planning to do ICOs in the utilities are kind of trying to figure out how their business shifts into an STO. And so what we're seeing a lot of right now is companies that are basically saying, I have a utility token, but we are making it secure. We are going to register it. And I would definitely not recommend that as a path forward. And I'm happy to talk more offline about to anyone that might be doing that on why I don't think that's a good idea. But I think that we're going to start seeing a wave of that that. People are going to try to obviously like be the first ones to digitize certain types of physical assets. And then I think in the future we're going to start seeing a much more mature model that's going to be more based around the idea of being able to have sort of like a evolution on the traditional venture capital route, something that I think that can provide a little bit more flexibility, potentially liquidity in the way that companies can run their businesses. But I don't think we're quite there yet.
I just want to mention something. So this is not about ICOs versus STOs. I think utility tokens have a very legitimate usage for a decentralized protocol. Different stories whether they're being sold illegally or their fundraising happens legally or not. But where the opportunity is not making ICOs legal. That's a tiny $1 billion market. The opportunity is about digitizing real-world assets. So if you think about traditional securities, and Vincent Molinari from Templum, who's been around for a long time, explained it very well before, but securities used to be paper-based, then they became digital, but they also kept the record of the paper copy until the Hurricane Sandy happened in New York, and the DTCC basically lost all the paper copies of the shares, and then the SEC declared that you can just hold securities only on digital form. So when you issue a security token or a digital security on the blockchain, it's just another digital representation of a security. It's 100% legal. You own the security by owning the token the same way that you could actually digitize a security on a centralized database instead of a distributed ledger technology. It has nothing to do with the underlying blockchain technology. You could use any one you wanted, whether it's Ethereum, Neo, EOS, or whatever new one people want to come up with, and that's the value. Now, the point of doing it with distributed ledger technology is that you can then control compliance in a decentralized way. And that's where the powerful thing is, because all these issues that traditional securities have with settlement not happening instantly, or transfer restrictions being complex to apply and not having liquidity, or not being able to distribute dividends in an efficient way, etc., they kind of disappear here. So the automation, the liquidity is what makes the underlying digitization platform more powerful than traditional digitized securities.
Great. Can you pass that down? Yeah. Pass that to Mason. I'd like to get you involved in the conversation. And can you just start by introducing yourself and the background of TokenSoft?
Yeah, so my name is Mason, and I'm with a company called TokenSoft. We started helping companies launch security tokens in 2017, and basically what we are is we're a platform that helps onboard investors and helps the issuers remain within their relevant compliance requirements at issuance, distribution, and trading. And those could range from banking laws, securities laws, as well as tax laws. So yeah, that's what we do.
Great. And there's actually one of the next questions that you just sort of brought up in my mind is the question of, are security tokens for blockchain companies, or are security tokens for anybody? And I've noticed quite a few successful blockchain entrepreneurs here. I saw Bitfence is here, ConnectX. Those are companies that issued utility tokens, raised money in the old world, who are now doing security token offerings. Are you seeing, and why don't we start with Mason so you can jump in and share something with us. Are you seeing that security token issuers are more companies that are fundamentally blockchain companies that are raising capital? Are they just any companies that are raising capital? Or are you seeing both and it doesn't matter?
Yeah, I would say that so any company can launch a security token, whether they're a blockchain company or not. And I think it comes down to mindset. We see the folks that are looking at launching security tokens as more seasoned entrepreneurs or CEOs that are more accustomed to the traditional world of finance. And a security token it comes very natively to them. It's intuitive. It's simple. And so I would say maybe 75% of the companies that we're seeing are normal companies looking at doing security tokens, and then perhaps 25% are blockchain companies that are now looking at, how can I take advantage of this new concept that just came about recently and raise funding in this manner.
Great. Yeah. Dan, do you have something to add to that?
Yeah, so because of platforms like the folks here on the stage and our platform, because the flows have become so easy and the issues have been resolved into standard practice, you see the cost coming down significantly, and it's very easy for folks in traditional markets to issue their securities as tokens now. So it's opening up significantly, and it's not just the specialists in the space. The bottom line, though, still is for very good security offerings, the ones that are top-notch and have no trouble raising capital in traditional channels. Folks still use those traditional channels. What we're seeing here as the first offerings are really interesting ecosystem plays. Things like energy finance or creative arts finance, movie finance, et cetera, where there's not just one offering but many that follow subsequently and require a platform that makes the process repeatable and simplifies those types of raises. So because the cost is coming down so significantly, we are seeing the market open up to many more traditional offerings.
I just want to mention something about the 25% that mentioned, which is probably about right, of the how many people looking at doing security tokens are coming from, let's say, blockchain companies that will maybe do an ICO in the past. If someone comes to us and says, I want to do an ICO for a utility token, but because I know it's illegal to sell utility tokens to retail investors, especially in the US, it's very, very, very clear, then I want to do it as a security token offering to make sure I do it legally, but then I can use the utility token for retail investors and list it in Binance. That's still illegal. So there's companies, in particular, there's one company in our space that actually has done that, and that's very stupid to think that you can get away with that. Because if you sell something as a security, it stays as a security. It doesn't matter if you add utility later on, it doesn't actually become a utility and disappear the security, and you can just give it to retail investors. That's really, asking for someone to go to jail. So for those companies, what we advise them is, please do a security token with some asset back, whether it's a revenue share, a dividend, part of the equity of the company, for the fundraising. And if your company really has a legitimate usage for a utility token because it's really a decentralized protocol that requires some sort of incentive mechanism that the utility token provide, then fit that into the network, but don't sell it to investors or to speculators for a profit, because then you're turning it into a security and you will never turn it back. There's only one exception in the market, which is Ethereum. Ethereum is the only utility token that was sold to investors as a security, let's say, but then, throughout the years, got sufficiently decentralized, and now the SEC has, indicated that Ethereum is not a security. Everyone else is probably a security.
No, that makes a lot of sense. And one thing to keep in mind is that there was a period of time when there were some top-notch law firms that were giving the advice that you could do a token pre-sale as a security, but once your token was sufficiently decentralized and in use, it would no longer be a security. And I think everyone who's on stage agrees that that is a flawed model that nobody is following anymore. You should assume that your token pre-sale agreement is a security, and ultimately your token itself has to comply with all of the SEC rules for exemption from registration, or it needs to be registered as a security. Anyone?
Yeah, I think something that's interesting is kind of why some of this is happening. Like, why is that happening? And from what we've been seeing, a lot of that seems to be that, the idea behind the ICOs originally was this idea of kind of having this, taking the mindset of the technology itself, which was decentralization, and really allowing people that were involved in the technology, whether that's being built or the users, to be able to have some ownership in that, right? And I think that is something that people still want to try to maintain as they're trying to move over into something that is legal. But the framework that's legal when we're talking about these STOs really does not provide for that, for the most part, right? Because most of the models require accredited investors. And so I think because of that, you're starting to see a lot of people trying to maneuver and figure out how do they keep this kind of mental mindset around what the purpose of a lot of this was, where all this was birthed from, and why people wanted to start these projects in the beginning and are trying to do these projects, and how they can still maintain that moving forward. And I've heard a lot of potentially interesting or not interesting ways that people are trying to solve for that, but I think that that's something that's going to keep coming up, and I think that's something that we should all be very wary of in terms of when we're looking at what is the motivation behind doing some of these STOs. And I think we're going to see a lot of the people that have been involved really wanting to run legal companies and figuring out how to do that while keeping that mindset.
So that, and I want Mason to start with this. I know you want to jump into the last question, but let me throw this one in. Maybe you can answer both at once. There doesn't seem to be a lot of conversation about what happens when all of a sudden these very earlier seed stage companies even have liquid securities in the market. And suddenly you have hundreds or thousands of Elon Musk wannabes whose every tweet is going to be scrutinized by the SEC. Is there a lot of conversation about how to act as a startup CEO in this new age of having an SEC-compliant crypto asset in the market?
Yeah, I think the fun part about the blockchain space is it was completely new technology, and people just started building products on top of it. We saw this with Bitcoin. People just started building different applications. We learned that those were supposed to be structured as exchanges. And a lot of this is just entrepreneurs and developers starting to meet the real world. And they're building out their products, they're learning about the regulations and the business requirements that they have to run their corporation. And so there's a lot of learning happening in the space. And I think we will continue to see a little bit of this where people are maybe a little more outspoken or aggressive on Twitter than they should be, and it's going to affect the perception of their company. But I think that's just going to be part of the industry growing up, and in 10, 15 years, it will probably meet the traditional world of securities somewhere in the middle, and people will understand that they do have to be a little bit more formal and thoughtful when they proceed in the space.
I will also add that if you're an early stage startup and you're raising $1 to $5 million, you're just better off doing a Series A or doing a Reg CF offering or something like that. I don't think security tokens will add any value to those companies, because a lot of the things that security tokens solve for in terms of cap table management, automation, instant settlement, liquidity, etc., they're not going to be there for small projects. I think that more mature companies that will probably do like a low-end IPO or a Series B, Series C fundraising, etc., that are more mature, are better suited for the liquidity that the market will bring. Because as you said, otherwise you're going to have people speculating about a company that doesn't have much traction in the market. So I don't think that security tokens, as they are today, they are for startups. They are probably more suited for either larger projects, real estate, or more mature companies.
This is what's really fascinating about this new market. The power of smart contracts really can't be overstated. So we have in our compliance-aware tokens, and I know others are looking to go in this direction as well, the ability to build in those actual securities controls, such that when a public announcement is made that the principals of the company can't actually trade their shares at prices that would be manipulative, the tokens themselves actually prevent that from happening. And that's important because many junior CEOs don't actually understand the securities laws and would make that mistake. So when tokens can actually govern themselves in this new framework, as ours do, you can actually prevent these mistakes because, again, most junior CEOs don't know these rules.
Okay, well, this panel went way too fast, so I just want one more question sort of going down. We'll start with Dan and move it to the end. Which aspects of the security token ecosystem should be in the token itself, should be managed and maintained by exchanges, or should be part of potentially centralized or decentralized platforms that handle other aspects like investor communications, analytic platforms, information platforms? How do you see the whole ecosystem evolving?
So in our framework, we have rule sets that are able to be enforced on-chain within the tokens themselves as well as off-chain. So for the time being, it's absolutely necessary that you have the compliance rules built into the tokens themselves, and those compliance rules have to work as they move to ATSs or other exchanges, which are oftentimes centralized. So that means that the rules actually have to work in both places. all other aspects of a token's life cycle, the automated government reporting components, the shareholder voting components, the dividend distribution pieces, can actually reside on-chain, as ours do. And it makes for a very easy mechanism to do decentralized governance of your actual security.
So to answer your question, the best way is to understand how capital markets work today and how they change when you move into the blockchain, right? So if you, in capital markets today, if you're, Facebook and you're trading on exchanges, you have the exchanges that have brokers connected to it, that people place the orders to them, and those brokers are connected to clearing houses, that they're connected to counterparty risk that manage the lack of instant settlement risk that happens with the trades, that they're connected then to the people, the settlement agents that are connected to transfer agents and central depositories like the DCC in the US. Once you move things to the blockchain, you basically collapse all these layer of intermediaries into basically two layers: the exchanges, which can remain there, and then someone has to play the role of the registrar/transfer agent, of course, with a decentralized protocol on the blockchain to guarantee us these advantages. So we see those two layers, the only ones surviving, as a lifecycle management for security tokens or issuance platform. We play only on the registrar/digital transfer agent and connect to many of the exchanges. I don't think the exchanges should be the ones guaranteeing the compliance. That does not, they have to guarantee the compliance for onboarding investors, but not for approving the trades. Because if the exchanges do that with their own protocols, you will not be able to trade the same token in multiple exchanges. So most exchanges we talk to understand that and push down that role. And when you control that, because your customer is the issuer, then everything has to do with the relationship with the token holder, in this case, dividend payouts, shareholder communication, proxy votes, etc., is handled by the protocol. So I think that this is how the market will get configured, and so far, having been here for over a year, everyone has the same understanding.
Go ahead, since you have
Jackie?
Okay, so I think something that the way I like to look at it is mostly like, what are the things that we really care about having that kind of transparency for? And that if you're looking at, where the future of this is going to go, it's usually pretty logical decisions, just to speak in super layman's terms here, in terms of like, is this an action that would be better to have full transparency? Like you were talking about kind of shareholder voting. That's a great example. And that's something that's not just for STOs, but it's something that we're already starting to see some government, state agencies being interested in implementing. Right? And so that's a prime example of something that makes a lot of sense to have a certain amount of transparency and visibility, that one, the votes happened, and two, when they happened and who participated. And that's a very, very simple thing that makes a lot of sense to be on chain, right? Whereas the actual, say, operating agreement for an organization makes a lot of sense to stay off chain because it's a larger file, there's no need. But what you can do is you can hash it and make sure that what can be on chain is that document has not been altered since, say, a vote or something has happened on it, right? So I think that's a really easy way. If there's a lot of data involved, it's off-chain, but you can hash that thing to make sure that it's immutable and it hasn't been changed. And if it's something that you're thinking about putting on-chain, it's something that you want that transparency over and has a business reason for that to be the case.
Great. Well, we were just 30 seconds, if you could.
Yeah. So I think one of the fun things about building in the space is that it's still generally an art. So when we started the company, what we had to do was we went and understood all the securities requirements. We're already familiar with money transmission, and we basically took those regulatory requirements and packaged our blockchain architecture into that. And so we're implicitly following the regulatory requirements. And I think the fun part about as we move forward is a lot of this is a balance. It's the world of cryptocurrency still, whether we like to admit that or not. And so the security risks are still there. It's still possible to get your keys hacked. The regulatory requirements are there as well, from the security side, the banking side, as well as the tax. And I think it's really a balance. So how can you keep it all on or decide to keep it all on chain or all off chain? You really just have to look at the entire context and package together a solution that really fits all those needs.
Great. Well, thanks, everybody, and I hope you enjoyed it. Please look in the app. You can see how to follow everybody and connect with us later. So enjoy the rest of the show. Appreciate it.